Welcome back, everyone, to the Crypto Trailblazers series, a two-day virtual event with theCUBE and the NYC Wired community, an open community that revolves around content. My name is John Furrier, host of theCUBE. Stephen Willinger's here, general partner of Blockchain Builders, and also runs the Stanford Blockchain Accelerator at Stanford University. Stephen, great to see you. Thanks for coming in.
Yeah, thanks for having me.
I got my Stanford pin there on the jacket. Go Cardinal.
Go Cardinal,
Go Cardinal, I was going to say the other one, but you know, Cal and Stanford both have been really instrumental in the Ethereum Foundation's visit. You got GTC next week, a lot of concentrated brain power in the Bay Area, activated, a lot of activities. You hosted at Stanford a big event. So tell us what's going on, then I'll get into some things you're working on.
Yeah, sure thing. So Blockchain Builders is an early stage fund, and I guess I can go into it depth, but a lot of what we've done is build a community and ecosystem around building the blockchain space, starting off with the Stanford ecosystem. But as we've grown, that's evolved, and we've partnered very closely with some great partners like the Berkeley blockchain ecosystem, and most recently the Ethereum Foundation. And
they were in here all week.
And they were here all week, right? And so ETHSF, which has happened all week this week, and I think, you know, has been a resounding success, exceeded expectations, was a close partnership of those three organizations.
Talk about the shift. I mean, obviously we were talking at dinner, the speaker's dinner. You worked at Coinbase, you've got a lot of experience in the industry. As this community, I call it a community because it's really it's a movement really as well, global movement. As the climate gets better, you're starting to see the commercialization of signs of line of sight into commercialization. The maturization of the chain, apps being built on it, Ethereum's looking good, the team's coming together. Talk about that dynamic and some of the focused conversations at this week. What was happening? What was some of the hackathon participants doing? What's the trends in the trenches?
Yeah, absolutely. So, I mean, I think there's a couple things that are already old news, and everyone likes the new thing, but I think that they're critical, and they are actually what are being adopted quite quickly and getting a lot of regulatory clearance. And so I think in crypto, the original use cases have to do with payments, have to do with asset ownership and swaps, and those have grown quite rapidly in the DeFi ecosystem, but were held back by like an unclear regulatory environment, which has rapidly shifted. And so as the pendulum swings the other way, we're seeing like really rapid growth in stablecoins, and I think with the market structure bill, we'll also see really rapid growth in eagerness to bring both crypto native assets and also off-chain, like quote unquote real world assets on-chain because of the incredible innovation that's happened in DeFi that enables you know, really fast settlement and really cool interoperability between assets.
Yeah, we just had Michael Hendrick on of Zero G. I know that's one of your portfolio companies.
That's right, proudly.
They're talking about high speed, and he talked about some of the latency requirements for DeFi. We're starting to already see liquidity happening in the sense of companies potentially going public. Brian Bauman, who's the founder of NYC Wired, and I were talking about there's going to be a Mag 7 in crypto on the NYSE soon. And so you're starting to see you know, companies going public, crypto companies, right? That's like the next wave. So it's definitely coming to money. So tech and money are intersecting 100%. Michael talked about social change. So you got money, tech, and impact. What I like about your community is that everyone has an impact mindset, but they're not afraid to make money either, but the money's going to be directed other places. Sometimes in the pocket, but sometimes into social good because of the efficiency. This is the trend. It's a nexus of all three going at the same time. What's your reaction to that? Do you have any opinions and commentary on that dynamic?
Oh, totally. I'm, you know, a diehard capitalist. You know, went to business school, work in this industry. I don't think everything that is good comes from greed per se, but it certainly drives ambition, right? And so, having spent a bunch of time at Stanford and spending, you know, every day, every week working with Stanford founders, like intelligence is a really important vector for a successful entrepreneur, but so is ambition, right? And it's hard to meet founders more ambitious than those in the ecosystem, and also those in crypto, right? They really do want to change the world. They think very differently. I do think also that you know, the crypto community is not a monolith, but there are certainly parts of it, and the parts that I gravitate towards, who do want to have a positive social impact. Those ideals are not always the most liberal of ideals. They don't think that good necessarily comes from just, you know, giving away money. They think good comes from building durable systems that give people rights, give people liberties.
I always say to people, you know, radical is only a moment in time, because most radical stuff becomes mainstream. That's where innovation comes from. Obviously, libertarian's a big view. I want to ask you about the Stanford piece, because you said business school, and I went to business school. I got a CS degree too. And we were joking on an earlier segment in the community here around, I think someone who said it, the script is flipped. We hear that a lot. Oh yeah, the script is flipped. But the comment was, what you learn to do is change because of the infrastructure changes, and some of the paradigm is changing at the same time, which is emotional, it's also financial, and it's also group connections that are involved in these things. So what are some of the things that are, I won't say becoming obsolete, because when I went to school, like, you made money and then you build a foundation, get a couple of nice homes, whatever you do with the money. But that's kind of when you're successful. There's now things that are changing, even business model, like this is how you invest, this is how you invest in people. We're talking to another founder's doing trillions of dollars in trades with like 50 people. Like what? Like, that's not conventional.
Totally.
What are the conventional wisdoms being slaughtered, if you will, or just flipped upside down, or changed, or modified?
That's a really interesting and philosophical question, and not one I've been asked before. I think I can take from some current examples and
things you see, observations. There's no right answer. I'm thinking about it too.
Yeah, and I'm relatively unopinionated about these. I think it's sort of like any sort of a CapEx decision you need to make, right? If you manage to create a lot of value and you accrue a lot of wealth, that is not inherently a good or bad thing. I think as a system, it rewards actually innovation and ambition. And then what you choose to do next is another CapEx decision. Like, do I have another big idea, right? If you're Elon, you go, okay, I built a payments company, now a car company. He keeps having that next big idea, and love him or hate him, he takes all that wealth and doubles down on whatever he thinks that big needle-moving idea is, and he's not entered the ranks of billionaires donating a lot to charity yet. The inverse might be how Bill Gates does it, right? Where he's very specific in how he donates, and he's not doubling down on commercial ideas in the same way. And so I don't know what the right answer is.
Is there an entrepreneurial formula that you might see? Obviously, we'll get into some of the things you're doing with blockchain builders. Is there an entrepreneurial formula that maybe been old VC model changing? Because the teams are decentralized. I mean, I was joking the other day, like 2 guys in the garage. Now it's 2 guys on Telegram.
Yeah.
So you have a whole nother.
Yeah, there's maybe 2 vectors here, right? Just what it takes to build and be successful in crypto, and what size that needs to be. And then I also think there's another interesting vector as AI emerges, right? There's a lot of talk about we're going to have the first solo unicorn started in the next year, 5 years, who knows, right? It feels like it's right around the corner. Yeah, and I think in crypto the model has changed. When you have these globally distributed state systems, and not only that, but you don't have to pay to grow the infrastructure. It's actually your user who pays to use the infrastructure, and we have founders like Michael who build beautiful high-scale infrastructure. If you build something useful and that is captivating, you can deploy it, and the distribution is taken care of. It's not always that easy, but it can be, right? Like the number of people who work at Uniswap, or what's the Hyperliquid, right? Hyperliquid is one of the fastest growing protocols for DeFi right now, and there's a handful of people who work there, and it manages billions in transactions and billions in TVL. So that model's flipped on its head totally. And then AI in the same way, you probably don't need as many technical co-founders, and maybe even any, to build a really successful business.
Yeah, that's a great point. Talk about the work you're doing, and just give a quick plug for what happened this week with ETHFF in Stanford. What did you guys do?
Yeah, absolutely. So yeah, bit of context on me and Blockchain Builders. So Blockchain Builders is an early stage fund. We're in Fund 1, and we invest primarily, but not exclusively, in Stanford founders, right? So alumni and students who have come from that ecosystem. So how did we get there, though, right, in starting that fund? Before there was a fund, my 2 partners and I had already either worked on or started a couple really important things that are all centered around building up a entrepreneurial ecosystem or community around Stanford. And so there's the Stanford Blockchain Accelerator, which is now in its 7th cohort and has put great teams like Michael and Zero Gravity through it, but many others, probably 70 teams who have raised hundreds and hundreds of millions of dollars from all the VCs you might know, the Andreessens or the Paradigms or the Electric or the Sequoias or whomever, right? And there's awesome products that come out of there, have great product market fit, great marks, yada, yada, yada. So there's the Accelerator, which is really what started it all for us, and really gives entrepreneurs that leg up to try and be successful. but we also teach a class on blockchain entrepreneurship at Stanford called MSE 447. And so we do that to improve the odds of engagement in crypto and also company formation, kind of top of funnel for that ecosystem.
Yeah.
It also happens to be a gathering point for the community, as basically anyone who's close to Stanford and is an alum or student often comes to those classes because there's good content from us, and we also get amazing guest speakers. Like Vitalik was our guest speaker as part of, he was a part of this week's programming, but also the guest speaker for our last day of class.
Yeah.
And then we've also started an event series called BAS, Blockchain Application Summit Stanford. And we throw a couple events a year, and they are kind of on the order of 1,000 people. And they are very high signal for builders, right? We get really strong presenters on stage to talk about the innovations they're creating and seeing. And then we also get new, really promising founders in the mix as well. And it ends up being just a sort of like lightning in a bottle, right?
Yeah. Magic happens when you put great people together.
Yeah, absolutely. And so we work really hard on all those things. And we do all those things sort of like separate from the fund. Those are all essentially volunteer work, don't get paid to teach. The Accelerator is free and non-dilutive. The BAS event is run out of a nonprofit, and it's free to attend, and it's just funded by sponsors who get to put their logos all over the place.
I mean, it's a great enablement for the community too, because like you said, you're pipelining in from the class, the event brings people together, so this is a very community vibe, but also it helps out on the fund.
Totally.
Get deal flow. I mean, that's a good,
There is an incidental benefit, but we do get great deal flow, yes.
Yeah. What's the coolest thing you're working on right now that you could point to, or maybe one or two things that you're working on right now? What are cool things?
Boy, cool from what perspective? Like technologically interesting?
Technology cool and business model, like innovation cool. Take those two.
Yeah, so well, your first question I teed off, like what is actually happening in crypto, and I talked about some of like the old guard of use cases. The most interesting stuff is definitely happening in AI. So you just had Michael up, right?
Yeah.
And there's a bunch of categories in AI that are fascinating, and I'd say, over half of our investments are, it's somewhere in the intersection of crypto and AI, right? So what Zero Gravity is working on, right, which is a L1 specifically for AI that brings a ton of the benefits of hosting and serving inference in a decentralized manner to bear and making it easily accessible is one. But there's a bunch of other subcategories in AI that I think are interesting. So one, perhaps like an input to what Michael's working on is decentralized compute networks that can, go from bare metal all the way to hosted models to provide much more cost-effective inference for networks like Michael's, but also directly to users of that, and sort of give you an alternative to the hyperscalers that is both potentially cheaper, but also permissionless and has those properties. There's also the whole data side, right? We've reached this point in AI where scaling from training has tapered off a lot. We're getting cool scaling on inference from like test time inference scaling, but data is going to be the wall, right? And so crypto is an amazing platform to incentivize people to contribute novel data, and then also provide labeling that can train labelers ultimately, so that we can get past this quote unquote data wall and train better AI models.
I love what you do. First of all, it's great for entrepreneurs. Entrepreneurship is the future. The future's there. All the best brands come out of these waves. The cloud brought in no names like Airbnb, Dropbox, you name them all. No names, just developers kind of hanging out and doing things.
Literally homeless developers.
Homeless developers, Hey, Ray, Ruby on Rails, okay, no problem. But what I love about blockchain, and love to get your perspective on this, is that it's such an infrastructure opportunity, and infrastructure always has those movements. People get caught up on the crypto, the coins, and I do like the stable coin momentum. We'll come back to that in a second, but the infrastructure is where the action is, certainly on the AI side. Look at GTC, you mentioned a lot of the folks were in town for GTC. AI factories are coming. Yeah, that's centralized, but it's also distributed computing. So there's dots that connect there. Decentralized will be a factor, and companies will have to build on it. So the question is, one, your perspective on that, and two, your strategy to, one, incubate them and fund them. Are people on board with this? Like, I mean, are the VCs, are the checks coming in? What's it? Do you incubate them and then you show them around? What happens?
Yeah, absolutely. It's super diverse, right? But I think just on infrastructure, it kind of has a dual meaning when you talk crypto. Like imagine when you talk infrastructure, you think hyperscalers, you think the chips that go in the data center. When I think infrastructure, I think of sort of the protocols that are able to like serve like general purpose blockchain applications, and they're not dissimilar, right? One's maybe just like a layer abstracted above it. I think there's like crypto, or at least like blockchain and decentralized AI has a role to play in both of those. So when it comes to actual infrastructure, the things I mentioned, the decentralized compute are going to be super important, right? Like not every bit of compute can come from a hyperscaler, and it really shouldn't. That would be a dark world ultimately.
Yeah.
And then I think that's referring mostly to inference actually.
Yeah.
The flip side of that is actually around training, right? Where there's I was really bearish on this concept, but there's a concept called decentralized training, and it sounds crazy, right? Because it's like, oh no, we need to co-locate all these machines. We need really high throughput memory to make the training runs even like have a remote chance of being successful. So why would we do it any other way? But we're sort of hitting a wall there, not from the raw technology side, like, well, the GPUs will improve, the memory will improve, but we're going to hit a point where there's not enough power infrastructure in any one place to support the scale of training runs. So we're either building like Dyson sphere like infrastructure or whatever, right? But that seems pretty impractical, and I think we'll have our progress gated here soon. And so instead, it makes sense to come up with technologies that allows you to link up data centers more effectively and distribute training.
And we saw a lot of some talks here on theCUBE around, I used to call it grid, but like cycle time reuse. So it's like all kinds of efficiencies around idle states or what's resource. Clever ways to do that. That seemed to be one. Okay, so you got the cool things. How's it been being an incubator and an investor in the space? Because again, it's not for the faint of heart. I mean, this is a really technical community. Okay, it's mission driven, and again, you use the word, what was the word you used? But it's not monolithic. Very opinionated. I'll just say opinionated. So it's very active, which is a good thing.
Totally.
What's it like?
Yeah, I wouldn't want to work with people who aren't passionate or opinionated. That would be pretty boring.
Yeah.
What's it been like? Well, I mean, I guess if you ask me personally, I've transitioned from a very transactional role at Coinbase Ventures, where the amount of deal flow is infinite, and the job was very much to quickly evaluate and make good decisions. And it was an awesome job. I love my time there. But what I'm doing is like flipped entirely on its head, right? I spent almost all my time doing community building and meeting great founders from a pretty small and self-selecting, or not self-selecting, just highly selective ecosystem. And then instead of spending all my time like meeting with someone who somehow got a hold of me and trying to find out if they're like a grifter, scammer, or a really awesome builder, I already am lucky enough to sort of like A, have built relationships in the community, B, kind of like have all those community references, and C, like know people before I even have to get to an investment decision. And then my job is way less about making smart decisions, because I've already come to an easy decision by having a longitudinal relationship with people. And instead, my job is to really help people, right? And so instead of making a bunch of small investment decisions, I'm building community and working very closely with founders over intense periods of time to help them be successful.
That is such a great attitude, because it's value add, right? I mean, if you look at the venture capital model, some will say it's collapsing. It used to be value add, and then some would say it became value subtract. And then that's why this whole wave of the tech bro emerged, because they didn't want the VCs on their board. And by the way, that's why solo GPs, solo investors are founders. They want, and the first checks are coming from either solo general partners or networks. So you're already seeing trust as a huge factor in decision making on investing. Those are the best deals coming into the network, and then the VCs kind of sit at the A fence, Series A, waiting for the deals to come up, and they pay more, obviously. But this is good. I mean, I think it's a good thing.
I like
that idea.
I have like,
I mean, it makes the Cube Ventures idea pretty excellent. I mean, we see a lot of, not that we would do that, but the point is maybe we would someday, but the point is relationships. People want value. It's so hard to do an early stage company. The make or break factors could be, it's a thin line. I mean, I've seen companies make it because they got the right break. It could be a news article, could be an intro at the right time, and having an advisor or a friend, or those things are really super important.
So important, so important.
I'm off my soapbox now, but
no, that's great. I mean, I could get on that soapbox with you. Like, some part of me believes that like every VC should, in some way, run a simulacrum of an accelerator, right? Like the way we invest often involves like so much time with the founder, both before and after the check, and it's in a sprint format, so it scales, but. we know the team personally.
Yeah.
We know like what the genesis was. We know what they're working on. So even if after we finish the sprint with them, time passes, we are able to track the story and be far more helpful than if it was just the diligence process, which is sales process ultimately that got us there.
I love the whole transactional relationship. I think that's the future. We believe in trust networks with CUBE, NYC Wired, obviously. What are you up to now? What are some of your goals? Put a plug in for activities. What's on your agenda? What's your goals? Give us an update.
Sure thing. So, I mean, we just finished a really busy quarter, right? And it was all around community building. So we had a big event in East Denver called Bass Denver, right? And we had 1,200 people through our door. We put a bunch of our founders on stage. It was a lot of work and it was a great event. And then quickly after, like 2 weeks later, ETHSF was here, right? And ETHSF has been wonderful. It's in its first run, and I think it's brought a lot of blockchain energy back to the Bay Area. And it's also been purposefully geared towards combining that energy with some of the momentum that AI has. And so we've had some wonderful collaborations with AI builders in the region too. So that has been top of mind. All those activities support our portfolio companies, which is good, but we certainly are excited to get off our event planning sort of sprint and circle back and check in how teams are doing after we plug them into all these events.
I mean, you've got to plant the crops, and farm them up and get out and help the companies.
Yep, absolutely.
Love what you do, Stephen. Great to meet you guys, and looking forward to working with you. theCUBE is here in Palo Alto. We support your mission and events you need support. Love what you do, and again, it's entrepreneurial, but it's value add for the companies in society. Thanks for coming on.
Yeah, thanks so much for having me.
All right, the crypto trail, blazing the trails. New models are emerging, new ways to do business. Relationships matter in community. People are connected, but blockchain builders are out there. You're starting to see programmable infrastructure. You got the D-apps that's been around, that concept. People love that, but value, DeFi, money, impact, all happening here. Of course, theCUBE is bringing the data. theCUBE and the NYC Wired Community Special series on the crypto, blockchain trailblazers. Of course, we're bringing you all the data. Thanks for watching.